Hey, welcome. We just got that closing bell for Wednesday, November 29th. We did get directional today. What I'm not too sure of yet is the volume. So let's go ahead and take a look at that. Let's go over here to our daily chart in the S&P 500, and looks like our volume is still muted, but we are up, well, from a couple days ago. We are down from yesterday. So still not a lot of participation in the markets. So by now, traders and institutions should be back from their vacations. So what we're seeing now is it's less likely now that it's a holiday effect, and it's more of a wait and see. So the institutions are preserving their capital to wait for a directional movement in the markets. And it looked like potentially this morning we were going to get it where we opened and we traded a little bit higher, but we basically traded down during the day. So in the morning, in the pre-market, we drew these lines and we said if we can break above this local high, then we'll likely to get directional movement up towards this blue line right here. And then if we broke below the previous high, then we would have directional movement to the downside. And we got that, or we didn't get any conviction movement upwards in the morning. We came back down and we broke down below it. We came to the previous close, came back up to that previous high, came back down to the previous close, and that's basically where we ended. We ended a little bit below it, but basically we're close enough. So we're only on the day, we're only down 0.07%. So close to close, we've got sideways movement, but the price action intraday tells us an important story. And what the story is telling us is that as we try to move higher, there's a lot of downward pressure. So we saw that on this day right here. We saw it on yesterday, although it was not as high. We saw it the day before, and then we're seeing it today. When we go higher, there's this downward pressure that's keeping us moving sideways on a close to close basis. So that is weakening momentum. That is downward movement in the RSI, right? There's the strength of this price action right here is weakening. And if it keeps on weakening, then that is going to be a pullback. If it strengthens back up, then it's a possibility of it moving higher. But as we consolidate back and forth right here, if we keep getting that downward pressure off of highs, then this RSI is going to continue to move downwards, and the odds of us seeing that pullback get higher. So that was an important story for us to see develop today. In terms of other forces in the market, really what we're seeing is wait and see. There's a lot of money sitting on the sidelines just waiting to see what will happen. So the absolute best position for us is that VIX. As long as we wait and see, that VIX is just going to sit here and consolidate right here. It's not going to have very much room to move further down. You see how the VIX is higher than yesterday, even though we're lower? I guess that makes sense. That's not opposite. Okay, so that's exactly what we'd expect. But it's consolidating over here. We didn't get a lot of price movement. The VIX didn't move a whole lot. Even when we hit those highs in the morning, the VIX didn't move a whole lot. This is a market that's just waiting for something to happen, and the moment it happens, it's going to move. So either an algorithm is going to push us to a point where people freak out, and then the algorithm can take advantage of that, or we're going to get pushed by some sort of news. The earnings that we have left this week, I don't think, let's see, this week. Yes. So let's just look at any larger market cap. Do I have market cap? Let's say over 10 billion. Okay. And I guess it would be, some of these have already passed. So it doesn't look like there's a lot left. CRM, I think, is today. Why don't I have the... That's weird. I don't have the... Oh, here we go. Okay. All right. So the earnings date here, Salesforce today after market. Okay. So CRM has potential to move things. Intuit has potential to move things. Normally, would say they wouldn't, not by themselves, because they are big, but they're not that big. They are well followed, but they're not a magnificent seven. So, but they are the larger earnings that are happening this week. And if nothing else happens, then they will have potential to move the markets at least a little bit. Economic news that hasn't come out yet. We've got personal income tomorrow, the PCE report that the Fed favors. Never really moves that much. So I don't know why the Fed favors it. Because if a number doesn't move that much, it's not really, giving you a very compelling story to make a decision on changing a rate. I mean, it'd be great to say keep something the same, but it doesn't really help you decide to move something and change something. So I don't know why they like it so much, but they like the PCE report. So that has the potential to move the market. So definitely tomorrow, 5:30. So before the market, by the time we look at the market tomorrow morning, we'll be able to see the effects of the personal income and the PCE reports. And then we have Powell speaking on Friday. I don't know what he's going to speak about. I don't know why he needs to speak so often, but he's going to be speaking. So that might have potential to move us directionally. But this market is really just sitting here and waiting. Oops, I need to go on a daily basis. Yeah, really just sitting here and waiting for something to happen, some sort of news, some sort of stimulus, something to get excited or emotional about. And then we'll start to see directional movement because there's pent up energy. There's pent up money waiting to be allocated. There's only so long a portfolio manager is allowed to sit on his cash generally. Most portfolio managers have rules for their cash management. They can't sit in large amounts of cash for a long time. They have to put it somewhere. That's generally why you hear about the rotation between bonds and stocks, right? Because if a portfolio manager wants to be in cash, but isn't allowed to, they have to put it somewhere that is safer than stocks, and maybe as close to cash as they can get. Bonds might be one of those instruments. They might have certain money market or cash instruments that are available to them, but they're not allowed to just leave it in cash. So they will have to, they'll have to put it somewhere. So they're going to have to put their money to work very soon. And once we get a stimulus, then that money is going to go to work. So we are looking like we just are pulling away maybe a little bit from that +3 ATR finally. We're not at our +2 ATR yet. We're not at the +1 ATR target that I keep talking about, whether it's in the S&P 500 or QQQ or individual stock positions. That's really what we want to look for. We saw SBUCs as an example was pulled away at least to the +1 ATR. A little bit of a pause right there before now is all the way down to the -1 ATR. So any positions that we're pointed short, for example, in the aftermarket trade example we did 2 days ago, right? We always wait for that +1 ATR. If you're in one of my classes, we have a Dexcom position. I'm really waiting for that to pull back to +1 ATR, although it has to do it soon because we don't have a lot of time value left in that particular option. So we would either have to roll or just take a loss on the position if it doesn't pull back very soon. But it's coming. It'll get there eventually, and we will exit our position when that happens. But in the meantime, your portfolio, from a portfolio perspective, so it's always easier to manage a larger portfolio because you have the freedom to put on many different positions that can balance each other out. When you're dealing with a smaller portfolio that's only a couple $1,000s or less, then they're limited in the number of positions that you can have, and you may get blocked on more directional than you would like to be. But we always want to take that portfolio perspective and try to get as balanced as we can. Balanced meaning that that portfolio is aligned with the overall directions of the markets and not too far away from it. So once again, when we're considering any of these trades that we put on in the aftermarket or pre-market examples, we will always want to consider those trades in the larger context of all the other things that you're holding. So not a lot else to talk about in this market. As long as we keep chopping sideways, there's not going to be that much to talk about, or I'm going to sound like a broken record. It's just waiting for the pullback, waiting for the pullback, waiting for the pullback, or we could break up, we could get faked out, or we could get drawn in by algorithms, and then we'll get the pullback. Either way, for this market to go significantly higher, there does have to be a pullback, and it will happen at some point in time. So that's going to be it. Tomorrow morning, I'm going to have to remember, or you guys will remind me to take a look at these economic reports, because that personal income and outlays could really start to affect us and cause us to move either up or down. But either way, if we go up, again, we have a limited upside before most likely, if we go up, then there's even a stronger chance of a stronger pullback. So either way, we're going to wait for that pullback before we really start going long. We should be pointed slightly long in our portfolios right now because of this shift in trend that we got in late October. But when we get that pullback, that's when we can really start pointing our positions or pointing our portfolios very long. So until then, it's going to be a lot of waiting. All right. So that's it for today. I hope you guys have a wonderful evening, and we'll see what the morning brings us. Okay? See you guys.